going to go over a couple of things. So syndication basics. What are the basics? Who are the people involved in a full syndication? How can you even make money in it as a general partner? So I'm going to like slant towards being a general partner in this. If you're interested in passive investing, I have another course called Passive Investing Made Easy. You can grab that off my website. But today we're going to slant towards being a general partner because I know you ladies are super active and I love it. And then point number 4, can I even do this? Because I know that we often question ourselves and we're always like, is this too big? Is it too big to take on? And that's exactly what I did in the beginning. I thought, what? Raise millions of dollars? Like I've never talked about millions of dollars before. And it's pretty darn crazy that 2 years into my journey, I've raised over $3 million for these deals. And it honestly blows me away that someone like me could do it because I had zero network in the beginning. I didn't like talking to people and I was able to build this pretty amazing business.
That's funny because I always thought of the capital raising as the more extroverted role in syndication. So it's interesting to hear that you can be an introvert and you could even be the capital raiser.
I know it's different, and I just have to use different strategies than an extrovert uses to get to where I want to be, right?
Yeah.
What's syndication? Group investing, and my advice to you is if you are going to be a capital raiser and you're going to talk to people about this, don't use the term syndication. That's a little tip, right? It's too big of a word. People are going to look at you funny, like, what are you talking about? Or when you say syndication, because you're using a big word, even intelligent people who don't know a big word when they first hear it, they feel a little bit insulted. They feel a little bit less than. And you do not want to portray yourself as being above your investors. Like you want to portray yourself as being one of them. So I always call it group investing whenever I'm talking to passive investors. So number 1 is expertise, right? So you'll have 4 different things, right? So a group of people come together, those who have expertise, those who have time, those who have resources, and those who have money. And it's just simply finding those people and bringing them all together to purchase an asset. So who are the people? So I told you my family's musical. So anybody know what this instrument is?
Is that a clarinet?
No.
Anybody else got a better guess?
Is it an oboe?
Close. It's not an oboe. It's bigger. It's called the bassoon.
Okay.
I have a friend that plays one of those. It's the only time I've heard of it before this.
Yeah, it's this giant instrument kind of in the bass, and they play kind of the same line as the tubas, but they're a different type of instrument. Well, my oldest daughter, when she wanted to join the band in middle school, and this is how on top of things I am as a mother of 5, right? I didn't have an instrument for her. We hadn't chosen an instrument. And so she shows up to class and the teacher's like, where's your instrument? She's like, I don't have one. And he's like, well, we don't have anybody playing the bassoon. So why don't you try that? She's like, okay. So she tries that. And then she falls in love with it and goes on to become this mega amazing bassoonist and is playing it.
Wow. That's some like universal alignment right there.
Oh, it was crazy.
That's awesome.
She was so proud that she was the only bassoonist in the whole orchestra, as they were going through. But anyway, if you've ever heard a bassoon play, it doesn't really sound that great on its own. It's just kind of it's just this weird instrument. It's got kind of a weird sound, and I actually didn't love listening to her practice. It wasn't pleasing, like the flute or something. But when you put it together with like the full orchestra, it's pretty amazing what happens. And this is the same idea of team members, of building your team. So who are key team members? And at the very beginning when I joined you, this is who you guys are talking about, brokers, right? So the brokers are pretty important. And I'm going too fast. Real estate broker. So I do want to pause. I want to give you guys some tips and tricks here because you were asking about it. So how do you get in with a broker? I mean, you always hear all the time, well, you're not going to get a deal unless they like you the best and they'll bring you the deal. So a couple of things. If you don't have a track record, so say you're going into a new market and you want to try and find a deal in, let's say Sherman, Texas, because that's a little tiny town by me. Sherman, Texas, and you want to start calling brokers there. Well, one of the things is the language that you use. So when you're calling, and I actually have a script I'd be happy to share with you guys later, Marielle. I can send that to you.
That would be great.
I have a script that I developed. But when you're talking to brokers in the beginning, you want to present yourself as you know what you're doing, because the multifamily industry is hot right now. It's so hot that brokers are just inundated with people like us, calling them all the time. They're getting, hundreds of calls a month, if not more. And they're just trying to field it. They're trying to understand. And so don't get frustrated or snippy if a broker doesn't call you back. Right? Just understand they probably have like 40 voicemails that they haven't called back yet. And they're not going to, and they probably won't call you back, right? If you don't get them on the phone, they probably won't call you back because they don't know you. They don't know who you are, and they don't know anything about you. So if you're going to cold call, and I actually don't recommend cold calling, partly because I'm an introvert and I hate it, but also because it's just really hard to build a relationship that way. You've got to find other ways to build a relationship. And so one of those is networking. So can you find someone else, a different real estate investor, use the tools that you have. So the Facebook groups that you're in. Hey, has anybody looking in Sherman, Texas for a deal? Right? Could you introduce me to a broker, or who are the brokers that you know there? And so you can name drop. The more you can name drop, the better for to get in with a broker. So name drop lenders, name drop property managers, name drop construction managers, right? And name drop other investors. That will help you to get at least get their attention, right, at first. So once you've got their attention, you need to prove credibility in any way that you can. And that could be simply as you follow up with a broker. So every 2 weeks you email them or call. I prefer email because email they can quickly read, but you email them what you're doing, like the progress that you've made, who you've met, who you've networked with, the properties that you've driven by in their area, and just to keep them abreast. And you just have to constantly prove that you are the real deal, that you're going to close a deal, that you're going to do something here for them to feel like that they should bring you this deal over somebody else they've known for 10 years. So follow-up is key. The next thing is when they do send you a deal, within 24 hours, you need to have feedback back to them, right? And it needs to be more than, I don't like this one, I'm going to pass. You need to have like 2 paragraphs in your email of reasons why, of what you dug in, what you saw in the deal that they sent you, and the reasons and key reasons why you're not going to continue on with that deal. And then at the bottom, remind them of your criteria, right? So you have your criteria and you need to have it nailed down. So if you're looking for 20 to 40 units that's a light value add, or maybe you're looking for a 15 to 18 unit that is a heavy lift, you got to have your criteria and exactly what you're looking for, and you include that every time you go back to a broker so that you remain top of mind. And when a deal comes up that matches your criteria, they're going to be like, oh, I know this one investor that is looking for something like this. Maybe they will like it. And now suddenly you get that deal, right? So those are some quick little tips and tricks about the broker. And then anytime you talk to another investor, just get referrals, referral after referral after referral. It's still a heavy referral business. It's not an online business. Like, you need to get in and know. And then the next tip is, as much as possible, like if you've identified a market and you say, yes, absolutely, this is where I want to go and invest, you need to go there and meet people in person and meet the brokers in person. I know that's been hard with COVID. And so it's been, tricky, but my business did not start exploding, like my deal flow. It did not start exploding until I flew to the market that I was interested in and met with 2 brokers. I only did 2 because that's all I can handle at a time. And I met with 2 brokers. I had lunch with one, and that was really long. I didn't like how long that meeting was. And then I just simply met the other at their office and talked to them. And suddenly, within like 2 weeks, I had 2 off-market deals in my inbox. It was incredible. Like the amount that if you just make that effort, and then they can cement your name with a face and with meeting you, it makes a huge difference. Does that help? Is that helpful?
That was really helpful, because I think that, you hear a lot like go to LoopNet and find deals that match your criteria, and then like reach out to the broker so they can show you other deals like that one, even if the one on LoopNet is crap. But from what you're saying, and what I think makes so much more sense is like, find that market that you think is great, do some networking in it, figure out like what brokers are people working with, like what is a reputable property management company that's name you can drop, and really kind of sound like you have your ducks in a row before you reach out to a broker, then have a better chance of actually building that relationship and being seen with credibility.
Right.
I think that's really helpful. Did anybody have a question they wanted to ask specifically on broker relations before we move on?
Me.
Okay. Well, yeah, go ahead, Chelsea.
Sorry. You had mentioned how to be able to get a hold of these brokers, you have to consistently call them and you can leave voicemails, all the above. How did you get these 2 brokers, 1 on the phone and then 2 to actually agree to meet you in person from a cold call?
So it wasn't a cold call. It was a referral. So what I did is I found a property management company and I networked with them. They will answer your call much more willing than a broker. They're not getting as many calls as a broker, right? So I networked with a property management company and I asked her for referrals. I just simply said, hey, who are the top brokers in your area? And she gave me the 2 names. She did an email introduction for me with these brokers. And then we had the phone call. So like I said, I don't cold call. I guess I did cold call the property manager, but once you get once I get one cold call, from there I'm like networking and just trying to get other people and get introductions that way.
I've noticed that some of them ask me for a proof of funds as well. And maybe that's these are smaller multifamilies. I don't know if that's going to be the case with like the larger deals, but I had to get one before. One of them would even talk to me about like a quad or like a 6 unit. I was like, okay. I mean, in that market, they're cheaper than like single families in my market. So I was like, clearly I can come up with this money, but it was a requirement. So I felt like that was a box that needed to be checked.
Interesting. So in my experience, someone who asks you that is like, that just means they don't trust you, right? They don't trust that.
It was a cold call. So I guess when you're cold calling, you have to start building your credibility right there, which is at 0.
Yeah. I did try cold calls with brokers and same experience, right? Immediately send me your proof of funds. I'm like, dang it. They don't trust me. I don't think I will. So, like, well, okay. Yeah. Yeah. And so that's you can take that one of 2 ways. You can just simply dismiss it and just be like, just say, oh, okay. I hear you want proof of funds. Okay. Let me see if I can come up with that, but then move on and ask them a bajillion questions, establish your credibility, and don't worry about providing it. If they come back and ask again and again and again, then maybe you can be like, if it's worth it, right? Then I can provide something for you. But really, it's just dumb that they ask for that.
I know. It's like, come on. This is like a $350,000 small multifamily. I just reached out to my hard money lender and I was like, hey, can you just give me this proof of funds document? They're like, here you go. Anyways, formalities, but we're off to the races now in Akron, Ohio.
Hey, awesome. Good deal. Good deal. Okay, I'm going to go through these other ones pretty quick because I think you guys know you need a lender, right? Okay, that's
Yeah, we had Julie Peterson come and speak to us
yay, awesome.
1 week. Yeah, she's great.
Yeah, she's super great. Okay, so let's talk about the general partners. So what do the general partners do? Well, they do all the negotiation, the finding, they do the financial analysis, they manage the asset, and they execute the business plan. But specifically, I want to talk to you about like the different roles. So when I think of a syndication, I think of a general partnership as having 4 key roles. So number 1 role is your acquisition specialist, right? This is the person that's out there doing all the deal finding. So they're the ones that like to call the brokers and talk to the brokers and do this. I would consider this a great one for an extrovert, although introverts we have our ways of doing it, right? But they're the ones, they do all the negotiating, they do the due diligence, they make sure that all the due diligence happens, and they're the closer. So they make sure that, once they find the property, it gets closed. And there's like hundreds of steps within that. But that's your acquisitions specialist. Then the second person in a general partnership is the underwriter. And this is just simply your financial analyst. Again, underwriter is a term that I don't use when I talk to passive investors because it's one of those terms that is like, wait, what? What does that mean? I remember when I bought my first, residential house and like, it has to go to underwriting. I'm like, what is that? I had no idea what that was. But your underwriter, financial analyst, loves the spreadsheets. They have intimate knowledge of every single number. And this is crucial that, and when I was starting out in my journey in multifamily syndication, I tried all these, right? And I think that's important for every one of you to do before you settle on your niche, like which one you're going to be. I think it's important that you try them all, right? So I tried to find the deals, and I found some deals and got them close to closing, but then that was actually when COVID struck, and so everything stopped. And I learned underwriting, and it was hard. It was really hard for me to learn the underwriting. I mean, I thought I was good. I'm good at math. I'm really good at math. But when you throw in financial numbers and spreadsheets with 10 different tabs on them that connect to each other, wow, that was beyond what I had ever done. So it was a slog for me to learn it, but I'm glad I did. And I actually joined a group that had underwriting once a week. It was like an underwriting club that we did once a week. And I went to there, and you could bring your own deal that you had underwritten, and then the experts would grab it, and then they would talk to you about the numbers and what they saw, what they would tweak and change, and whether it's a good deal and should you go put an LOI on it or not. And so that's really cool. And actually a friend of mine, I was telling her about it. She's like, we should do it. We should do it for women. So we might be launching an underwriting club at some point just to help people really get comfortable with numbers. And so even though that's not my role right now as the underwriter, I still underwrite the properties that I join in on as a general partner. And I still double check the underwriting that my underwriter does, just to make sure that I'm keeping on top of the numbers and not going blind into a partnership or a deal. And then you have the capital raiser and investor relations. And this is me. This is my favorite. And I think it's all because it's like an education business. I get to build a business that educates people. And so I'm teaching classes. I'm creating content. I'm writing blogs. I'm sending out emails and newsletters and things like that to really educate my investor base. So bring more people in and then educate that base to bring money to the deal. And so this person needs to be an excellent communicator. They need to be able to speak well, to write well, and just to have all those things coming in. And then after it closes, they manage all the communications after close as well. So we always send a monthly newsletter monthly update about our properties, and it's like a big long thing with a couple of different sections in it about how the market's going, what the market's doing, how the property's going, the operations, the financials, and we send all that out once a month. And so that's part of the investor relations, and then fielding phone calls or not always phone calls. I guess sometimes they'll call me and then I'll text them back. Like stuff. Or if it's like super important, then I will call them back. But they're just managing that communication. And then finally, the fourth partner is the asset manager. And this is the person who is responsible for, after the deal has closed, to really manage the manager. Because on our deals, the deals that I do, since they're so big, we always hire professional property management and make sure that we have that on site. So they're there managing the tenants, but there's a lot of management of the manager that happens. And so, there'll be questions. We were on a call on Tuesday. So every week we have a call with our property manager, because I'm one of the asset managers for our properties. And they're asking us, well, what color paint do you want to do? Because we want to paint the exterior. We have a CapEx budget and things that we're going to do to upgrade the property. And so we have to make those design decisions. I'm like, oh, geez, I'm bad at picking design stuff. So you have to learn all these different things. And then they'll have a problem. They'll say, well, we have this tenant here that won't move out. What would you like us to do? Are we going to evict? Are we going to try and keep them? Or, what's the story? And so we really get into the stories of the tenants too, to understand the right step, because it's not always, the answer is not always, oh, they're late day 5, day 6, evict them, right? There's other things you can do. And that's another reason I love being in real estate, is because I feel like I can have some pretty big impact on people's lives, because even not only the investors who invest, and now we're giving them this great financial return and saving money on their taxes and helping their own families, but the residents in each one of our buildings, my partners and I, we focus on a return on impact, not just a return on investment. And so we kind of have a different ROI that we're focusing on, because we want to make sure that they have a beautiful, safe, clean place to live. And then also executing the business plan. So if you have a plan, you're coming in and you're going to renovate 100 units. That's what we're doing on this new 192 unit one. We're going to renovate, I think, 110 of those units. Well, how often do you do that? How many do you do at a time? Which ones do you do first? Which ones do you do second? And so it's this whole plan about how to go through and really make that property perform better. And so that's the asset manager. So I'm going to pause there and see if there's any questions.
I have a quick question. Yeah. It strikes me as this asset manager role could be a challenging one to come across. For example, in our group, there are certain people who are going to be the deal finders or the underwriters because they love spreadsheets, or capital raisers because they have big networks and love talking to people about new opportunities. But when it comes to asset management, we do have an asset manager in one of our groups. But in general, to asset manage a big project like this without experience, it strikes me as this one, you actually need to pull in somebody who has done this and done it successfully many times. Because I've so frequently heard oh, we have this one property manager, they weren't doing a good job. The asset manager had to step in and get a new property management company. And so what would you recommend as far as being able to find the right partner to be the asset manager?
Yeah, so I'd recommend finding someone that has some kind of experience in property management. So for me, I feel comfortable with this role because during my all of my investing in single families, I actually launched my own property management company. And so I knew the right questions to ask. And so when we're hiring a property manager, I know what to ask them. There are courses out there that you can take about being a good asset manager, but it is one of those things that experience is better than what do they call it? Street skills versus book skills or something. I don't know. Street smarts.
Yeah. Street smarts.
Yeah, there you go. Where the street smarts is better. I know this is a role that in the bigger syndicators actually hire out. They hire out an asset manager, and basically they a really good project manager.
Okay.
The project management of this it's probably 70% project management, and then the other 30% is knowing the ins and outs of the real estate industry. So if you can find a good project manager, I think they could be a pretty good asset manager. But again, it's something that takes time to learn. And so if you were going to go get like a 75 unit, I mean, it depends on how much time you have, right? If you're trying to acquire a whole bunch of assets in a short period of time, you definitely need a full-time asset manager. This job is probably bigger. If you think about the amount of time that goes into each of those 4 roles, the asset manager basically has to work for 5 years, and the others all work in the beginning. And then they don't do much after, right? The asset manager is a pretty huge role that I think gets, kind of forgotten. So I appreciate you bringing that up, Mariella, because it is definitely a big role in these partnerships.
Mm-hmm, mm-hmm. Yeah, it's interesting. I almost feel like maybe I overcomplicated it a little bit, though, because like hearing you talk about it, like I worked in property management. I was actually paid to be a project manager for like many years when I had a W-2. I managed flips. So I'm like, maybe a lot of these skill sets and I'm saying that because a lot of us, I think, have the same experience as I do. And so maybe we do actually have asset managers, especially when we're talking about like 8, 10, 12, even 20 unit buildings. Maybe when it comes to a 100 unit building, like we would obviously want to have somebody that had experience with a much larger building. Yeah,
I don't know. It's just numbers, right?
Yeah.
You can asset manage a 20 unit. You can asset manage a 200 unit. They're not that much different. They're really the key here to great asset management is making sure you hire the right property management company, right? And you brought that up. Lots of people are like, oh, I had to fire this one, and I went through 4 different ones, and that's a huge issue that you have to be careful of. And that's another reason why I went for property managers before brokers, because I wanted to identify the right property manager in that market and have them on my side before I found a deal. Yeah. Because I didn't want to just simply assume whoever was managing the property.
It almost sounds to me like property management companies are like contractors, and that like you'll get, because a lot of them come from recommendations, right? They come from referrals, but then for some reason it still didn't work. And I hear people say that with contractors, right? It's like, well, they did good work for me a couple of times, but it doesn't mean that they're going to do the best work every time, or maybe sometime they won't show up. And so
yeah, true.
I wonder if it's like, how come these property managers have done such a good job on other people's projects, but then for some reason in this one, drop the ball.
And then it's one of those things that, beauty's in the eye of the beholder, who they might, be good for someone else, but maybe my standards are different and not good enough for me, or, vice versa. Maybe my standards are lower and somebody else's standards are higher. And so they're fine for me, but not good for someone else. And it's a little bit nuanced. There's not a cut and dried answer, unfortunately.
Right. Yeah. Well, did anybody else have questions on asset management before we move on?
I have 2, I guess.
Sure.
So one of it is like on the asset managers. Do you like look for reviews for them, or it's like a real review, like a Yelp, or like how do you say like we have a bad experience with an apartment. Like say if I live in an apartment, I can see like all these reviews that, oh, the property manager sucks and whatever, right? So for asset manager, do you also look at that or for that?
You mean to hire an asset manager?
Yeah.
I've actually never hired one. So the general partnership is taking it on themselves. And I don't know if it's a job that you would, That's an interesting question. Like, I want to dig into that a little bit and try and figure out how these others are hiring an asset manager. I think literally I think the job posting would be project management expert that they would hire. And then they would teach them the basics of real estate rather than, I don't think anybody's out there, touting themselves as an asset manager. I don't think if you put a job posting for asset manager, you'd get a lot of applicants, right? So, it kind of depends. But typically it happens in-house, and really the general partnership team does it themselves or learns as they grow.
So my question is, what is the typical fee or percentage that an asset manager gets paid in a syndication?
I love it. Okay, well, let's move on and let's talk about how you get paid, because I think that's the next part. I might skip through a couple of these things. Oh, a key principle. So I'll get to your question, Kimberly, here in a second. So key principle. So this is the person who has personal funds that they can use as a safety net and meets the net worth requirements. I bet when Julie came on, she kind of talked to you about how the need for a key principle, which, by the way, ladies, is something to aspire to, because if you can be a key principal on a deal, you can get 10%, 10 to 15% of a deal, and you have to do literally nothing. You just sign the loan and you get a piece of that pie. So it's a pretty cool thing to aspire to, but you do need one of those on every deal.
Can I ask a quick question about that? So can key principals sign over and over and over, or can they sign and then 5 years later they can sign again, and 5 years later? Because you would think if they had done that 10 times, then suddenly it will lose its credibility that they actually could cover all that.
They can sign over and over and over again.
Really? Loophole. I like it.
Yep.
Another quick question. Is the key principal the same as the sponsor?
Not necessarily, no. So the sponsor is a generic term for general partner. And so there could be a lead sponsor, and lead sponsor is like the main general partner who's leading the project. And then there's co-sponsors or co-GPs that come in. But that's really what a sponsor is. It's just another term for general partner.
Thank you.
So if there's any risk involved, so say for instance there was a fire or there was something that happened and some sort of money is required, say a couple $100,000 or so, would that be the KP's role or the GP's role to fund it? I mean, to gap fund it, I guess.
It would be the GP's role.
Okay.
So the general partners would need to do that. Now, they could ask the key principal to help them, right? But the key principal is not, they could be on the hook for it. If the general partnership just throws their hands up in the air and says, we quit, key principal is on the hook for that loan, and will have to address it, right? But it's the general partnership's responsibility to make sure that the property runs well and they manage all the hiccups, because I'm not going to pretend that there's any deal that's not going to have hiccups. That's not the nature of real estate. Real estate has challenges, and we all know that, and the reason we like it is because of the challenges, and you just have to be confident in your ability to navigate those challenges.
Thank you.
Mm-hmm. All right, so Kimberly, I want to come back to you about how do you make money? So if you're a general partner in a deal, number one, there's 3 paydays. So 3 ways you make money. So first way you make money is an acquisition fee. And this is typically 1 to 3% of the purchase price. No, sorry, not purchase price, of the amount of capital raised. So say you raise $5 million, then and it's 1%, right? Then that acquisition fee is $50,000, right? But if you raise $5 million and the acquisition fee is 3%, then that's $150,000. Okay, and so that's where you're going to get into the money, and so you get an acquisition fee up front. Now, the second place you get money is an asset management fee, and the asset management fee again is between 1 to 3%, and this is on gross revenue. So this is a monthly fee that's charged based on gross revenue. So whatever all the rents that come in for that month, then you guys charge 1 to 3%, and then that gets paid out to the general partners. And then finally, there is the cash flow, or the equity split, which is when you put a deal together, your underwriter will help you navigate this and figure out, well, you have to know your investor database. You have to know how much your investors are expecting to invest in your deal. And the deal has to be good enough for an investor to take $100,000 out of the stock market, take the risk on you, and put it into a real estate deal, which is why we offer some pretty nice returns. And so you play with that number in the equity split for the general partners versus the limited partners, which is your passive investors. And typically the general partnership gets 20 to 30% of deals. Sometimes you can get 40%. Rarely can you command 50%, but it just depends on how good the deal is. And so those are the three ways you make money. Now, the cash flow can happen, and I guess four, right? If you think about the equity split, you get cash flow during the deal sometimes, right? Now, I'm going to be fully transparent with you. Typically, the first 2 years of a deal, especially if it's a value add deal, there will be no cash flow for general partners. You'll be getting your asset management fee, because remember, that's a fee taken off the top, but then the profits, typically all those profits will go to the passive investors during the first 2 years, if you're doing a big deal. Now, if it's not a heavy value add, so say it's one that you found that is already cash flowing really well, then maybe you could get some money on the cash flow in the first couple of years. But on the deals that I do, we do value add, and it takes us about 18 to 24 months to get all the renovations done, the rent up to market rent, and then we start cash flowing well enough to be able to give the general partners some money. So really, we live off the acquisition fee in the beginning. So you get a big chunk of money in the beginning, and then you'll get a small amount of asset management fee depending on how big the deal is, right? How much revenue is coming in, and then you'll get cash flow in years 3, 4, 5. Then at the sale, you get a really nice paycheck for your work in the deal. And so you'll get that, whatever negotiated amount, the 20 to 30% at sale. And so that's how you really make money in a real estate deal.
Just to clarify on that asset management fee, now that's going to all of the GPs, even though technically at that point there's one person that is the asset manager.
Right? As a general partnership, you guys have to determine that. So okay. I'll give you an example. On my last deal, we closed 100-unit deal. We closed in Oklahoma City. The general partners, there were 6 of us. There's 6 general partners. The 6 general partners shared in the acquisition fee and the general partnership equity carry. But the asset management fee, we said, is only going to go to the 2 people who are actually asset managing, and that's me and the other partners. So that's how we negotiated it. You can negotiate it like many different ways, but in my mind, it should go to the person who's doing the work, right? And that's who should go to, or at least the majority of it, and the rest of the general partnership could get some, because the rest of the general partnership should still be joining some of those calls and should be helping in some way, and should know what's going on with the property. You wouldn't want to just be the acquisitions person and then say, okay, see, I got the property now. I'm never going to look at it again. That puts yourself at risk. You want to make sure that you know what's going on with the property.
Mm-hmm. Okay. We had one clarifying question about the asset management fee, that 1 to 3%. Whether that's off the purchase price. I think you said it was the monthly revenue.
Asset management fee is monthly revenue. Yeah.
It's out of the monthly revenue. Okay. And what is the average preferred return, someone asked?
So between 6 to 8% is what is average
Okay.
that you give to passive investors. So a preferred return, if you're not familiar with that, that just means that the passive investors get paid first. So the first 6% right off the top goes straight to passive investors, and then the general partner, and then we split the cash flow, whatever's left over after that. But like I said, on a typical value add, usually 6% is all that investors are getting for the first year.